All right, day 17 of my stock market portfolio, my journey to $500,000. All right, so first thing I like to look at is the total equity in my Questrade accounts. So first of all, in my margin account, you can see that the equity here is 4143, so it dropped from Friday. Obviously, the general market dropped, so most of my positions will go down. So my equity dropped a little bit in my margin. I think I was at 5,100 come Friday. Now it's at 4143. If you look at my TFSA, I'm at 50,047. And finally, my RSP, I'm at 16,504. So I'm down to 70,694 when I think I was close to 73,000 on Friday. All right, so the first thing I did today was, if you remember, I had an iron condor on the SPY expiring September 23rd. I had the put side, which had a short strike at 275. And then I had the call side, which had a short strike at 300. I was a little bit worried of the 300 strike on the call side. So today I decided to remove the call side. So remember, this iron condor, I collected $130 to open it. And as you can see from the difference here, the put side generated about $83 of that $130. So 130 minus 83 that you could see, which comes from the difference here, 288 minus 2.05. So the call side generated $47 when I initially opened the trade. So today I closed the call side for $45. So I actually closed it for a $2 profit, but if you take into consideration the commissions, then let's just say I broke even to close the call side. So I got rid of it. I also got rid of the risk if the stock does go above 300 come September 23rd. I just felt that the stock had a better chance of being above 300 come September 23rd. It is still 3 weeks away, and we could have if we have 3 good weeks in a row, I think it will surpass 300 easily. So I got rid of that risk. I'm comfortable at the 275 put. I mean, the SPY is trading right now at 290. So Nvidia dropped a bit today, of course, like everything else. I'm still in a profitable position. As you can see, I can close the trade early for a profit of about $110. But of course, I'm going to wait. I'm probably going to wait somewhere close to September 20th to get the max profit of $400. Box, for some reason, jumped after hours. It closed the day at 14.85, but after hours it went to 16. So that's kind of weird. It's good for me. I have a strike of 20 and the cost of 20. So the fact that it's going back up will allow me to sell higher premiums for the next month. So even with everything else dropping today, Dell did not drop that much. It's still trading at 51. EWZ dropped today actually, but since I have a strike of 37, I don't care what, anything above 37, I don't care what EWZ does. I'm getting my expected profit anyways. GLD went back up to 145, actually closed at 146.2. Kind of scary. I've got a short strike at 150 and 140. These are my limits. I don't want GLD to go above 150 nor below 140 come September 30th. The plan, of course, is to close it out early. In fact, I think I collected $112 from this trade. I can actually close it early for about $96, $98, but obviously with commissions, it's not ready to be closed yet. But it's good to see that the trade is going in the right direction. I opened a new trade today on the Qs. So I sold the vertical put. So I sold a put credit spread on the Qs 30 days out, so expiring October 4th at a 176 strike, collecting $64. But my strikes are $4 wide. So my risk is $400 minus 64. So my risk is 336. So that's a potential return of 19% in 30 days. And I didn't sell the call side because the premiums to sell the call side at the same distance was much lower than 64. I think it was like $30 or $35. So I didn't think it was worth the risk on the upside to collect $36, but then I'm risking $300. Uber is getting destroyed. I mean, I bought it at 40, closing at 30 now, closing at 30.7. I'm really happy I didn't buy Lyft. I was actually strongly considering Lyft when it was trading at 58. And I thought 58 was a deal or a good price. Now it's trading at 45. So aren't I happy I did not buy Lyft? And I think for that reason, I'm going to really stick to quality stocks and ETFs like the Qs or the SPYs. My next trade, when I have enough buying power, right now, as you can see, I'm borrowing $77,000 from my margin account. So I want to bring that number down. Once I bring it down, which will happen when I start selling some positions, my next covered call trade is I really want it to be the Qs. For example, a weekly trades on the Qs. So for example, this one expiring September 6th. I could choose a strike that's actually lower than the current market price to give myself even more downside protection in case the stock drops. Let's say stock right now is trading at 185.6. I could pick a 184 strike and it would only cost me 182.8 to get into the trade. So the difference between 184 and 182.8 is my profit in 1 week. Plus, as long as the Qs stay above 184 until September 6th, that's the profit I make, regardless of where the stock is trading at above 184. So that's a weekly return of 184 divided by 182.8. That's 6.5% per week, which gives you a 33% return per year. I could go 184.5. I could go at 185. And remember, this isn't a full week because Monday was closed. So the weekly return can actually be higher. But of course, as the stock goes up, the weekly return will drop because there's less volatility in the premiums. But when the stocks go down, when the market goes down, there's more volatility priced in the premium, so they're more expensive, so you collect more. But this is definitely the next trade I want to do when I have enough buying power. When I bring down the borrowed amount, because if we go into a recession, if the market crashes anything close to 2008 or 2009, I would be in big trouble because I've got a lot of positions under margin. So these were my highlights for today. So if you have any questions, any suggestions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.